George of the jungle, strong as he can be.
You know, yesterday was April 1st, and I think there's a lot of people that I hope don't get suckered into a little bit of an April Fool's joke, and this would be a horrible joke. We're going to have a serious discussion in the credit jungle today about what it means to have a forbearance on your mortgage payment. Seems to be a lot of concerns about it, and it seems to be a little bit of an attitude that maybe it's a vacation from having to make some of your payments. That's not at all what it's going to be. So we're going to discuss the details of that today on thecreditjungle.com. My name is George Anderson, and thank you for dropping in. These are some serious times right now. I think there's a lot of people that have a genuine sense of fear and uncertainty. We talked about this before on protecting your credit during this thing. Just a quick add-on to that video that I did about the credit items. There's a couple of other things that don't report on your credit report that you can make payments on. If you do owe the IRS, and if they have not filed a lien, they will accept a payment plan to you in lieu of filing a lien. So if you know you owe money, don't run and hide. Don't put your head in the sand. Contact your creditor, start working with them, make a payment arrangement. The same thing is true with hospital bills. If you can catch them and get onto a payment plan before it goes to collection, they will work with you on a payment plan. So you can have payments going out to a collection, to the hospital that will not be on your credit report. You can have payments to the IRS or to the state tax commission. You can be on a payment plan and it will never show up on your credit report. And we talked about this again, your utility bills, your insurance, your cell phone, your cable. You know, those things are only going to report to your credit report once they go into default and get turned over to collection. So if you have to start picking and choosing where you're going to pay your bills, I realize you need lights, you need food and utilities and stuff like that. But be very judicious about what you do. And hopefully there's some quick relief on the way. But I want to talk specifically about something in the mortgage world regarding this forbearance, because there's still a lot of things that we don't know yet. And I talked about before how there's basically a 60-day forbearance that's in place that was given by the Federal Housing Finance Administration, which is not FHA, but it's another government agency that kind of oversees and regulates the mortgage industry to an extent. But a lot of people got into the month of April and they just kind of go, well, you know what, I just got laid off, I'm not going to make my house payment, and I heard it doesn't report to the credit bureaus, so I'm just going to take a vacation. Well, I might do that again next month if this virus thing is still affecting the economy, and it's been a very significant impact, and I don't know that it's going to snap back in a minute. But so let's just suppose that we went out here for 3 months and we didn't make any mortgage payments, even though maybe we could have. It might have been a little bit of a sacrifice, it might have been a pinch, but maybe we got some information on the internet that, you know, that it's Carnival Tuesday. You know, that we can all just basically do whatever we want for the next 90 days and there's going to be no consequences to it. Well, that is not what's going to end up happening on this. Most lenders, when we say a forbearance, what it means is that they're going to forbear the collection activity, the reporting activity for a specified period of time. There's going to come a time when there's a reconciliation and you're going to have to catch up. So what happens in July? Well, come July, the lenders are going to realize that, okay, well, you owe your July payment plus 3 months prior payments on there. Now, they didn't file a notice of default, but what they are going to do is they're going to collect their late fee. And on a conventional loan, the late fee is 5% of the payment. So in this case, that would be another $100 a month. Well, they're going to come out and want the $6,300 there, and then they're going to want another $2,000 for the regular payment. So they're going to want a total of $8,300, and chances are you might not have that in the bank. So you go ahead and make your regular payment, you send in your $2,000 payment. Well, what are they going to do with the $6,300? Well, I can't tell you exactly what's going to happen. We know that they're going to consider doing some loan modifications, doing some other things, but that money is not going to be forgiven. Forbearance and forgiven are two completely different concepts, and you can't file bankruptcy on mortgage debt. You can under a Chapter 13 plan, and that's what lenders are used to doing. They're used to seeing a Chapter 13 restructuring plan, where at the end or at the beginning of the bankruptcy, a Chapter 13 period, what they will do is they will say, okay, well, we're going to start accepting regular payments from you again, but the total that you owe with late fees is going to be put into a separate account, and you're going to be making payments on that. Now, most bankruptcy plans are somewhere between 36 and 60 months. I don't know what these lenders are going to want. I don't know if they're going to want the money back in 10 months, 24 months, or whatever, but if we kind of take an average of, say, it's 36 months, you're going to have to start sending in an extra $175 a month. So assuming that you can get this worked out and qualify for the forbearance and everything else, when you start making your mortgage payment again, it's not going to be just the $2,000 a month. So you're probably going to have a regular payment now that's going to be $2,175 a month, and that is going to, in this circumstance, that would be for another 36 months until you can at least get it current and have those arrears being brought current. Now, there's some other complications that come into play with this. Let's just say that they don't report it to the credit bureau. Okay, great. It's going to show that your payment was made. Let's hope that that's what happens. But what happens when you go to refinance your house? Let's just say an opportunity came along and you could get a better interest rate. Well, the credit report's not the only document that we look at. We're also going to look at the title report. The title report might show that there was maybe a forbearance or something that was filed, or some kind of a document that would identify that you're in some sort of a repayment plan. Underwriters look at the title report. They're going to ask, well, what is this? Give me some more information. And if it's not on the title report, it's going to show up on the payoff statement. The loan balance on there, they're going to show that, well, it's not just 1 month of interest, which is typically showing on a payoff statement. It might be showing 4 months. And the underwriter is going to look at the payoff statement, because that's what underwriters get paid to do. They're detailed people, and they're going to look at a payoff statement, they're going to look at the title report, the credit report. They're going to look at all of these things, and they're going to be going, well, how did all of this happen? You know, he must be late on his mortgage. I mean, or this is going to eat up your equity. So if you can, don't put yourself at risk. Don't put yourself at risk just assuming that this is all going to get worked out. My fear is that a lot of people are going to presume that there's going to be all kinds of flexibility and forgiveness and latitude and everything with this. And on your mortgage loan, you might have some of your other debts that you might be able to work out an agreement where they take less money or settle for less or anything like that. But most people in the market today, you've got equity. The bank knows you've got equity. And if you're unable to get caught up and do this, you might be threatening your capacity to stay in that home. And I would just be very, very cautious going forward, and don't assume anything about what your lender is going to do unless you get it from them in writing. So before you start taking a vacation from your mortgage payment, I would call your lender. I understand there was one of the lenders that yesterday alone, on April 1st, had over 8,000 phone calls in their servicing department from people wondering, do I owe my April payment? Well, best to assume that, yeah, you owe it and it's time to pay it. And if you're under some circumstances where you can't, well, that's what these programs are designed. But you got to understand that it's going to be subject to the interpretation of your lenders if you qualify for that forbearance on there. So go forward with caution. Try to keep a good attitude about things, and realize that there's going to be some help out here. But if you don't have to take the help, please don't, and stay current on your mortgage. That's the best advice I can give you right now. This is George, and I hope to see you soon. You can push button, get Mortgage Professional, and I would be happy to talk with you about your specific situation and find out how to best help you keep your home, keep your equity, and protect your credit. Thanks for coming into thecreditjungle.com. Have a great day.